Hello and welcome to a VSA Capital podcast. Today I'm delighted to be joined by John Argent, Vice President at Sound Energy PLC of Geoscience. Today's podcast is going to focus on the hydrogen and helium side of sound. Obviously, a few weeks ago we spoke to Andy about the interim results and the wider plans for the company. But today's podcast is going to be pretty focused on the hydrogen side of sound. So, John, thanks very much for joining us and looking to hear the latest on this side of sound.
No, thank you very much, Oliver. It's great to be here and I really appreciate the time.
So, the JV started, I guess, about a year or so ago in 2024. It comes after hydrogen got a huge amount of attention, a lot of funding during the easy money period of COVID, and it's had a bit of a reckoning with the real world since then. The IEA just published a report cutting pretty drastically the number of hydrogen projects they think are realistic. So sound has come in after that reckoning. Why do you and Sound still think there is a strong rationale to get into these markets?
Yeah, I think that correction that you're mentioning there was more really based around green hydrogen, and that comes to the project economics around that. Perhaps we can touch on that at the moment, but we're looking at something a little bit different here with our partners GTEC, which is natural hydrogen. Okay, or geological hydrogen, and this is free hydrogen located in the subsurface, and something a bit new and that has opened up since then and could change the economics of the landscape of the energy sector moving forward. So I'd like to say, first of all, that we're absolutely delighted to be working with GTEC on this one. They've been a fantastic partner so far. They really are a global leader in locating some of the essential energy and mineral resources for the energy transition. And as you say, we've been working with them for the last year, and earlier this year we completed a regional screening study of the whole of Morocco, the whole of the territory of the Kingdom of Morocco, and we did that with them. And what we were doing there was we were applying their proprietary geological workflows to identify and perhaps de-risk areas with the potential for this natural hydrogen and also some associated helium, but we're concentrating a little bit more on natural hydrogen. And the results, they were really encouraging. We now have several high potential targets, and that will allow us to focus on that next phase, which is refining our exploration program, looking at permitting, acquiring exploration licenses, moving with some geophysical surveys, ground activity as well, and perhaps ultimately drilling. And to take this forward, we've formed a 50-50. It's a joint venture company that we formed called High Morocco Limited. It's 50% owned by Sound Energy, 50% owned by GTEC. And that to me is a really exciting first step. It's the start of a brand new business stream, alongside our very important ongoing natural gas and hydrocarbon operations along there. So it's a new business that we're forming, and GTEC brings to this, some really serious and capable technical horsepower there. They're AIM-listed like ourselves. They started life as a research group at Leeds University back in the 80s. But I think what I want to stress, and what the differentiator here with this opportunity is, they hold the world's largest commercial library of gravity and magnetic data. And we can talk about that a little bit further when we talk about geological and subsurface hydrogen, the aspects of that. But that database is really important. So they've got some pretty remarkable capabilities. So what makes this partnership, in my view, so strong is that combination. Their world-class analytics, their subsurface expertise, together with our local partnerships, stakeholder relationships that we have, and our know-how in delivering operations and on the ground in Morocco. So that's what I think a really powerful blend. And it's great to see, great to be there.
And if the structure is 50-50, so that's the exposure that Sound shareholders will get to future success.
Mm.
What are the requirements for funding, and also how will the weight of this operational workload be split?
Yeah, so I think at the moment the companies sort of fund their joint share, but actually it is just in terms of capital being placed into that, it's our time really. We're undertaking these desktop studies here. If we were to secure some permits, the work program would be quite light. There would be some some geophysical surveys, some sampling on the ground. That doesn't require significant capital, but you can add real value to those permits with enhancing the subsurface understanding. And that really gives you, an opportunity as you're looking towards creating that long-term value for our shareholders, that there could be some sort of near-term opportunities to crystallize value, through that work. So perhaps you could introduce additional partners to the project, as we progress. So, for example, and I've got a few examples here, globally, momentum is building quite fast. So it's a company called Gold Hydrogen. They're in Australia. They've recently attracted major investors into their drilling program and their project in southern Australia down there from Mitsubishi and Toyota, amongst others. And that, that capital is around about $15 million that they've got in there. And if you look back here to the UK, you've got a company called Snowfox Discovery. They're a private company based in Oxford. They've attracted 30 million from the likes of BP, Rio Tinto, and others. So, and that's before they've even secured any exploration permits. So, now there are over 50 companies, worldwide doing this. And the caliber of, the investors getting involved is getting quite impressive. And if I could give you sort of one last example, the sort of poster child, if you will, of the industry is a US-based company called Coloma. They're natural hydrogen explorers. They recently raised, close to $250 million. I think it was $246 million. That was from the Bill Gates Breakthrough Energy Ventures, Amazon, and United Airlines as amongst the group there that made that investment. So that just shows how seriously the investment community is taking this opportunity.
Mm. So the good quality projects are still attracting capital, but there's been a thinning out of the weaker projects that don't necessarily.
That's exactly right. I think that could perhaps bring us on to, why perhaps we think Morocco is potentially, attractive, for that, because, if you think of, Morocco itself, or perhaps we should step back a little bit and think about, hydrogen as a geological play in that, it is similar to the oil and gas business and the model there. And it all starts with perhaps understanding how hydrogen forms in the subsurface underground. So go back to GTEC, their workflows build on that, a genetic understanding of, of the natural hydrogen system. So again, as I say, very similar to how oil and gas explorers approach petroleum systems. So we're applying a sort of proven exploration logic, but obviously to a different type of resource. So you need to think about, where's you're sourcing your hydrogen, how it's migrating through the subsurface and then being, trapped in some form of reservoir, very similar to oil and gas. And if we go back to, the geology and Morocco itself as well, there are two main natural mechanisms we believe for sourcing hydrogen. One is serpentinization. It's a geological process which essentially is, iron-rich rocks react with water, releasing hydrogen. And the other one is radiolysis, which is where water molecules are split by just the natural radioactive decay of uranium, thorium, and potassium, which are found in granitic rocks. So you acquire the right rocks and some water in the system as well. And Morocco, importantly, has both. It has crystalline basement, so that radiolysis mechanism, and also ultramafic rocks, what we call, which are iron-rich rocks in Morocco, and they're overlain by various sedimentary layers. And a key element, I think, for us in Morocco is it has a sealing salt layer, and that's where we're developing our gas resources onshore Morocco in Tendrara, for example, in the gas field that we're about to get first gas from at the end of this year. That sealing salt layer is really important because salt is one of the very best known seals in the subsurface. So, our sort of think about this, our first, that genetic workflow there, our first step is to map those hydrogen source rocks. using that magnetic data, and that's where GTEC come in. Once hydrogen is generated, it migrates and accumulates beneath that salt seal, the seal, just like oil and gas. So, what we've been really doing in this last year is working with GTEC, screening the subsurface with their data and those maps that we've produced to guide in where we're thinking of putting up permit applications.
And how does natural hydrogen fit in against the various grey, blue, green sources? Is it potentially cheaper? Is it more difficult? Where does it sit?
Yeah, no, that's really an excellent question, Oliver, and thanks for bringing up the rainbow of colours of hydrogen, which seems to have attracted the this sector. And I don't know if we're plagued by it, but yeah. So look, I mean, the key thing about hydrogen is, when you burn it, it produces heat and water, so it's a completely clean fuel or fuel stock, okay, or feedstock. So, but the challenge, globally, is that 90% of the 100 million tons of hydrogen used each year is made from fossil fuels, and that releases an awful lot of CO2, and that's called grey hydrogen. Okay, and grey hydrogen comes from steam reformation of methane from gas. Black hydrogen's worse, and that comes from coal, using coal as a feedstock for it. Now, less than 10% comes from electrolysis powered by renewables, and that's known as green hydrogen, as I mentioned before. It's cleaner, but it's also much more expensive, and I think that challenges the economics around this space. So the cost of, say, a kilogram of hydrogen, by green hydrogen, that is, it's about $12 per kilogram, up to, compared to $2 for grey hydrogen per kilogram. So there's quite a margin beneath the two, and I think that's why, as you mentioned earlier, those economics are challenging. But here's the really interesting part. As I said before, hydrogen can also exist naturally in the subsurface, and that's called natural. Sometimes it's called white, sometimes gold hydrogen. But until recently, very few people have really deliberately been looking for this. And a lot of people, it's very early days in the science and understanding this. And I would say that to date, there hasn't been a proven commercial accumulation of hydrogen in the subsurface to date. But evidence from the work done, as mentioned, Australia, US, particularly around Kansas and Idaho, that shows that natural hydrogen is clearly more common in the subsurface than we first thought as well. So this is something worth looking for. If we can get there, we think we can produce natural hydrogen for as little as a $1 per kilogram, something in that. So the economics are very compelling. You suddenly have a clean, scalable, and low cost resource on top of that, and that's very attractive for heavy industry, hard to carbon abate industries as well, chemical industry, power generation, any sector that relies on hydrogen feedstocks. So this natural hydrogen, if it was to to deliver, this could be a real game changer in the whole energy transition. So we're not talking about low carbon, we're talking about a no carbon opportunity, and for me that has massive potential and is very exciting.
And from a geological perspective, how does helium fit into this JV?
Yeah, so let's not forget helium. That's quite good. So it's often found, alongside natural hydrogen as well. It currently commands a much higher value than hydrogen to date. I think you get $400 per MCF, something like that for helium. It's scarce. You can't manufacture it, and it's still in strong demand. The market has tightened somewhat recently, so there's potential to add an additional revenue stream to any natural hydrogen discovery, natural hydrogen project, because you'd expect some helium to be associated with it.
Okay, and Morocco has started to move on this. It's set up some strategic initiatives, but as you say, there isn't a sort of geological or analog or commercial analog to use as a template. So where is Morocco in terms of developing a licensing regime for hydrogen and exploration permits?
Yeah, so I would say on that regard, we've had some, initial discussions with ONIM. ONIM are the Moroccan state-owned, mining hydrocarbon company. They've been active actually at looking at natural hydrogen since 2017, so for quite some time now. They're also part of a broader academic project on natural hydrogen in Africa called the High Africa Project. It's a collaboration for a number of universities, Morocco, elsewhere in Africa, and also in Europe as well. But GTEC are also a member of that High Africa project too. So between us, I think ONIM, GTEC, we're well positioned. If we can work together to try and unlock some of Morocco's hydrogen potential through there. But also, think of the terms of the fiscal terms, that the code there, they're very close, the Moroccan government, to introducing a specific natural hydrogen exploration petroleum law, or production law, I should say, natural hydrogen exploration production law. And that's part of their 2021 hydrogen roadmap linked, into the kingdom's national energy strategy. So that they've been working on, for some time. So ourselves and the other players, we're very keen to see this new law introduced that will facilitate, further investment, needed really to try and really get after this, this potential resource in the nation.
And there have already been some licenses that have been agreed. So is there any concern that the best acreage has gone?
So you're correct. So ONIM has also entered into a number of MOUs, memorandum of understandings, with a few other players. So there's one called HyNat, which is a Swiss company, which they've entered an agreement with. There's also one called NG Storage, which is the French utility as well. They're working in that space as well. Those agreements are over, a portion, of the Kingdom of Morocco, but a lot of Morocco still remains, unlicensed at the moment. As I say, we conducted our screening study across the whole of Morocco, and we think we've found, some areas with some, very exciting potential. And obviously, we're talking to our stakeholders in Morocco, about how we might go about securing permits to allow us to, progress with further investment on that.
And obviously, starting off in Morocco makes total sense, as obviously your gas business is Absolutely. There. But from a demand perspective, there are some really interesting strategic reasons to be looking at hydrogen in Morocco. OCP is the world's largest phosphate producer. So can you tell us a bit about how they rely on imported ammonia and hydrogen at the moment, and how the kingdom is looking to change that industry?
Yeah, so absolutely. I think this is an area that we always think about when we talk about hydrogen, natural hydrogen. Like any gas project, I think there are always two key questions that investors always ask. Is there a market? What does it cost to get it there? So let's just assume that the science works. We locate a sizable commercial, what we believe to be a commercial, or we find a sizable accumulation that sustains what we could be potentially commercial flow rates to deliver over a long-term contract. Morocco actually offers a very strong local market for that hydrogen. So as you mentioned, for example, in ammonia production, hydrogen is essential for producing, ammonia. And currently, Morocco imports all of its ammonia. So that's just under 2 million tons a year. And that costs the state, in the order of $800 million annually. And that's, quite a big number for a country, particularly with, their agricultural sector is extremely, important. So again, globally, 99% of hydrogen for ammonia comes from fossil fuels. OCP, you mentioned, they're Morocco's state-owned phosphate and fertilizer giant. They're an enormous company. I think they're the largest phosphate producer in the world. They're looking to invest $7 billion into a green hydrogen-based ammonia production project. Imagine if you could, change that to a natural hydrogen-based ammonia project. Because remember, I mentioned the costs of green hydrogen up to $12 per kilogram for green hydrogen. Natural hydrogen could cost, as low as $1 per kilogram. So, there's a very wide margin there that would, could be very attractive for this type of project to really improve the economics of that sort of large scale scheme. And of course, another product as well, natural hydrogen could also feed methanol production as well. And again, that's another key industrial feedstock, used in Morocco as well, increasingly used for, low carbon shipping fuel as well. So you could produce those ideally if you wanted to commercialize a natural hydrogen discovery as such. You could produce those two products directly at the site. And then you avoid all the transport challenges that people always raise, and rightly so, about transporting hydrogen as a gas or liquefying it. It's quite a challenge to do that as well. So you can look at, obviously transforming that hydrogen at site into ammonia, or methanol.
And the other advantage that natural hydrogen might have, which may be more important than the sort of basic economics, is that it wouldn't require nearly as much water as a green hydrogen with a capital G to produce.
You're absolutely right there. Yes. And water at the moment in Morocco, surface water at surface for agriculture and industrial purposes is in short supply.
And you've touched on it through the conversation, but Sound has a number of local partners. I guess that's a key thing that you're bringing to the JV. So can you just talk through the various relationships and how you think they might benefit the JV over time?
Yeah, so clearly, Sound Energy is we've been operating Morocco since 2015, since we first entered the country. We have built relationships over that decade of being present in the country, with large scale industrial groups as well, from Managem Energy. Managem Energy just taken over operatorship and invested into our gas project in Tendrara. That provides a particular link. They're a mining company. There's also Africa Gas, our links into them. They're our off-taker of our LNG. So we have a long-term LNG sales contract with them from our Tendrara gas project as well. We also have extensive links within the government and the authorities as well as ONIM, very close to ONIM as well, who indeed are our partners on all our hydrocarbon exploration licenses that we have as well. So, and then on top of that, we have a network of broader stakeholders within country that we can engage with. So we see ourselves as very much embedded in Morocco. We are a company that knows the landscape in that region, and we certainly enjoy being there, and we see the opportunity to progress this type of project with our partners, GTEC.
Mm-hmm. Excellent. And so, what are the likely next steps and potential milestones that Sound shareholders should be looking out for?
Yeah, absolutely. So the next steps that we'll be looking at is obviously to secure exploration licenses on the ground itself, and that will allow us to make those additional investment steps in their bid. In terms of capital required for there, would be relatively small. There are studies that we're doing. There will be some ground surveys in there, but once we have those in place, we build a much more compelling, robust case for the presence of hydrogen. Then we can look, as I say, for opportunities to crystallize some early value for our shareholders here by bringing in an additional partner with more capital for the project to move it forward.
Brilliant. I mean, it's amazing. There is quite a lot of depth to this strategy, although it's still at an early stage. It ticks a lot of boxes, and at the moment it's basically a free option in sound.
No, absolutely. I would say, for our shareholders, this is something that I've been developing on the side, so to speak. My key focus and our focus, is the getting to first gas in Tendrara, but this gives that additional option, and I'd certainly say that momentum is building in this natural hydrogen space globally. If you're focused on transitional energy, this is definitely a sector to watch. It's early, it's exciting. It has the potential to reshape part of the global energy landscape. So, I look forward to bringing more news as we progress our efforts with our partners.
Brilliant. Well, that seems like a good place to stop. So, John, thank you very much for your time and all the best with progressing the hydrogen strategy.
No, that's fantastic, and thank you very much, Oliver. I really appreciate the opportunity to get some of this across to our own shareholders, but also other potential investors out there that could be looking at natural hydrogen and sound energy.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.